And welcome back to Forex Scope, your go-to channel for all things Forex. Today, we're diving deep into the exciting world of GBPJPY, bringing you insights and potential trading opportunities on both the 15-minute and 1-minute timeframes. If you're looking to stay ahead of the market and sharpen your trading strategy, you've come to the right place. Don't forget to hit that subscribe button and the notification bell so you never miss out on our latest analysis and signals. Let's get right into it. The support zone is identified by a period of consolidation and multiple retests. Observing the price action, we see a cluster of candles between November 10, 2025, 5 hours and 15 minutes, Unix timestamp 176-275-1700, and November 10, 2025, 6 hours and 30 minutes, Unix timestamp 176-275-6200. During this interval, the price fluctuated within a tight range, with the highest price recorded at 202.605 and the lowest at 202.454. This trading activity suggests that the price found a floor around these levels, indicating a potential area where buying pressure emerged and prevented further declines. The multiple touches and the sideways movement within this range are strong indicators of a significant support level where buyers were actively stepping in, forming a well-defined area of demand. The presence of several candles with substantial wicks at the lower end of this range further reinforces its significance as a support. The duration of this consolidation further solidifies its importance. The resistance zone is characterized by a clear price ceiling that acted as a barrier to upward movement on multiple occasions. Examining the period between November 10, 2025, 9 hours and 30 minutes, Unix timestamp 176-276-7000, and November 10, 2025, 12 hours and 30 minutes, Unix timestamp 176-277-7800, we observe that the price struggled to break decisively above the range where the highest price reached 203.196 and the lowest price within this resistance cluster was 203.066. This interval showcases several attempts by the price to move higher, but these were met with selling pressure, pushing the price back down. The repeated rejections from this upper boundary, evidenced by the formation of bearish candles or long upper wicks at these levels, clearly delineate a significant resistance area. The price action suggests that sellers were more aggressive in this zone, limiting any further upward momentum and creating a zone where a ceiling was firmly established, indicating a strong supply. The consistency of these rejections over a prolonged period validates this as a key resistance. The support zone is identified by a period of consolidation and multiple touches around the 202.94 to 202.95 price range. Specifically, the candles from 1831 to 1833 and again from 1846 to 1850 show price action hovering in this area, with several instances where the price either bounced off or struggled to break below this level. For example, the period between 1831 and 1832 saw the price open at 202.958 and close at 202.963. With a low of 202.958, indicating a struggle to move lower. Similarly, from 1846 to 1850, the price action consistently found support around 202.94 to 202.95, with low prices in this vicinity across multiple candles, such as 202.929 at 1846 and 202.932 at 1852, suggesting buyers stepping in. This repeated interaction and inability for the price to sustain a significant move below this cluster of candles highlights its significance as a demand zone where buying pressure has historically emerged, preventing further downside. The range between 202.936 and 202.946 encapsulates this key area of buyer interest. The resistance zone is established by a clear price ceiling that has repeatedly capped upward price movements, particularly observed in the timestamps between 1845 and 1846. During this period, the price attempted to break higher but was met with selling pressure. The candle at 1845 opened at 202.973 and closed at 202.968, with a high of 202.981, demonstrating resistance at the upper end of this range. The subsequent candle at 1846 opened at 202.968 and closed at 202.936, with a high of 202.969. Further reinforcing the area around 202.97 to 202.98 as a zone where sellers become more aggressive. This price level has acted as a barrier, preventing the asset from moving higher for extended periods. The consistent inability of the price to break and hold above this area, as evidenced by the consecutive candles failing to sustain higher closes, points to significant supply entering the market in this price discovery region. This repeated rejection at these levels, with highs touching or nearing 202.98, indicates a strong area of selling interest, making it a critical resistance zone. The range between 202.969 and 202.981 effectively captures this significant selling pressure. The GBPJPY is currently showing a mixed sentiment, trading around the 202.977 mark. The recent price action, particularly the small fluctuations within the 1-minute timeframe and the previous 15-minute data, suggests a period of indecision. We've observed the price testing both the support around 202.946 and the resistance near 202.981. The Fibonacci levels, with the start price, 202.949, lower than the end price, 202.981, indicate a slight bias towards an upward trend. However, the current price action is contained within a tight range. Looking forward, we anticipate a potential test of the support at 202.955 as sellers might try to push the price down from its current level. If this support holds, we could see a bounce back towards the 202.972 resistance. A break above this would then lead to further upward movement, potentially targeting the 202.965 and then the strong resistance at 202.981. However, if sellers regain control and break the support, we might see a retest of lower levels, perhaps around 202.938, before a potential recovery. The Bollinger Bands on the 1-minute chart are showing a narrowing, indicating decreasing volatility, which often precedes a breakout. The tick volume is relatively low, suggesting a lack of strong conviction from either buyers or sellers at this exact moment. The previous resistance at 203.196 and support at 202.542 from the higher timeframe analysis provide broader context, but for immediate price direction, we focus on the intraday dynamics and the immediate Fibonacci levels. The interplay between these factors suggests a volatile but potentially directional move is on the horizon.